Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday, the 26th of February here in London. I'm Caroline Hepker. Coming up today, Ukraine is said to agree terms for a minerals deal with the US as the UK ramps up military spending. Donald Trump says that he will offer gold card visas to people who invest $5 million. And Foxton staff tell Bloomberg that they faced groping and slurs at the London property broker. We have a special report. Let's start with a roundup of our top stories. Ukraine is understood to have agreed a deal with the US to jointly develop its natural resources. Sources have told Bloomberg that Ukraine's cabinet is expected to recommend the deal to be signed later today. President Zelensky will then travel to the US on Friday to sign the agreement alongside President Trump. Bloomberg's Dan Flatley says the deal came together after the US dropped its demand for Ukraine to pay it $500 billion via resource extraction.
We're now talking a much lower figure. You know, it's still kind of unknown exactly what it is, but maybe on the order of $90 billion. And of course, one thing to point out is that Ukraine doesn't have rare earths, quote unquote, but it does have titanium, gallium, other important minerals that the U.S. is interested in securing a supply of.
Our US national security reporter Dan Flatley, who says that the latest version of the deal still doesn't spell out specific security guarantees for Ukraine. However, US officials argue that binding Ukraine to the US through economic ties would provide a de facto security shield. Trump's apparent refusal for the US to be the final guarantor of security in Europe is continuing to drive a rapid recalibration across the continent. Yesterday, the UK Prime Minister Keir Starmer announced plans to increase defence spending to 2.5% of GDP by 2027 and 3% over the next decade. Speaking after the announcement, Starmer said the US president was right to call for a ramp up in Europe's military spending.
Yes, it's true. President Trump thinks we should do more, and I agree with him. It chimes with my thinking on this. And by more, I mean more capability, I mean more coordination, and I need more spending. And we have to learn the lessons of the conflict, particularly when it comes to capability and coordination.
Starmer says the initial boost to defence spending will be funded by deep cuts to the UK's aid budget. The announcement comes at a crunch diplomatic moment for Starmer, who is due for talks at the White House on Thursday. Starmer is hoping to use the discussions with Trump to bring him back on side after the US caused consternation across Europe with its diplomatic overtures to Russia and Putin. Donald Trump has also instructed the Commerce Department to examine possible copper tariffs. The president's executive order cites national security concerns and the impact of dumping on domestic US copper production. The probe may lead to tariffs on copper imports, which could raise costs and affect the flow of metal to the US market. The news comes as bond traders hedge for a possible economic slowdown. Morgan Stanley's chief US equity strategist, Mike Wilson, also sounded this note of caution while speaking to Bloomberg Surveillance.
People assume that President Trump is very focused on, he's not going to let the stock market go down. I have no idea, but he hasn't been talking that way this time. And I think this sort of idea, I know Scott Besson was on your show talking about Main Street versus Wall Street, and that is sort of, I think, how they're evaluating themselves, is how do we get Main Street to participate more in this economy kind of writ large, and shrinking the government, getting that crowding out of their hair, deregulation. Let's get rates down at the back end. They focused on that because that's what affects mortgage rates and things that American citizens care about.
That was Mike Wilson of Morgan Stanley. He says that the US economy is in a better place in the long term, but progress will be messy. It all comes as House Republicans passed a budget blueprint calling for deep cuts in safety net programs such as Medicaid. The move paves the way for $4.5 trillion in tax cuts, but faced resistance from fiscal conservatives and moderates. Now, China's President Xi Jinping is urging his officials to remain composed in response to domestic and global challenges. According to state media, Xi told senior officials that China must, quote, calmly respond. The comments signal a measured approach to the Trump administration's new trade and investment restrictions. Washington has ramped up pressure in recent weeks by restricting Chinese spending in strategic sectors, urging Mexico to impose tariffs on Chinese imports, and pushing for fees on commercial ships made in China. Donald Trump says that he will offer US residency and a path to citizenship to investors who pay $5 million. According to the president, the scheme will launch in 2 weeks' time and won't need congressional approval.
We're going to be selling a gold card. You have a green card. This is a gold card. We're going to be putting a price on that card of about $5 million, and that's going to give you green card privileges plus. It's going to be a route to citizenship, and wealthy people will be coming into our country by buying this card. They'll be wealthy.
President Trump speaking there. Commerce Secretary Howard Lutnick said the move would replace the existing EB-5 program, which allows immigrants to acquire green cards by investing a certain amount in a US business. The full scope of Trump's gold card program and how it will be implemented was not immediately clear. And in some corporate news today, Tesla's market value has dropped below the $1 trillion mark. That's as the car maker's European sales sink to an all-time low amidst fierce political backlash. Here is Bloomberg's Tiwa Adebayo with more now.
A sharp decline in shares, which closed down more than 8% yesterday, cemented a months-long downward slide at Tesla. The embattled auto firm is facing a dip, despite investors betting that CEO Elon Musk's close friendship with President Trump would open regulatory doors. But it may just be Musk's politics driving away customers. Jacob Falconcourt, global head of investment strategy at Saxo, says the entrepreneur's political baggage is weighing on sales. Backlash against the company is growing this year. Showrooms have been vandalized in the Netherlands, Colorado, Oregon and Washington, whilst weekend protests were staged at dozens of US stores. Musk is polling poorly in Europe, with a Swedish survey also finding increasingly negative attitudes towards Tesla. In London, Tiwa Adebayo, Bloomberg Radio.
And those are our top stories for you this morning. Let's have a look at the markets. But firstly, thinking about the close yesterday, US equities really faltered. The Treasury yield and Treasury yields on 10-year yields dove after weak consumer confidence data. The S&P 500 yesterday hit a 5-week low, falling 0.5%. The Nasdaq also has seen losses over the 4 days of about 5%. The Mag 7 entered correction territory yesterday. US 10-year yields fell 11 basis points to below 4.3%. In Europe, we saw defence stocks gain and banks extend gains to over 20% year to date. This morning, 10-year yields for the US are rising 3 basis points. This after that budget blueprint in the House that we were talking about, the Trump tax cuts getting a step closer. US and European equity futures are actually galvanised and a lot higher this morning. US Stocks 50 futures currently up 0.7%, although trading in the Asian hours was fairly mixed. So that's a look at where we are in the markets. Now, in a moment, we're going to be talking about, well, the whole raft of announcements that we've had from the Trump White House. It really does feel a bit like a news quiz this morning. There are so many things that we'll talk about. So we'll do that in a moment. Plus, a special story around Foxtons, the big real estate broker here in the UK. We'll be discussing that in a moment. But there's another story that caught my eye, which is of interest. Ed Stapley and David Hillier have a story out today. Panoramic views of the pitch, reclining seats, personal TVs, a concierge food service. Luxury is coming to the football experience in Britain. This is a story all about the new stadia that are being built across the UK. Everton's new stadium in Liverpool, which opens in August. Apparently, the club lounge costs £1,200 a season. All a far cry, really, from the kind of roots of the sport. But it's one piece that caught my eye from Ed Stapley and David Hillier this morning. It's on the Bloomberg terminal and also on the website. If you happen to be a footy rugby fan. My family are, even if I never go to a game. Right, let's turn our attention, though, to the main news, shall we, and examine President Trump's latest policy measures, from Ukraine to that gold card visa and possible copper tariffs. Let's bring in Bloomberg's Bill Ferries. Bill, good morning. Thanks for being with me. First, the minerals deal with Ukraine. Zelensky and the Ukrainian cabinet look ready to sign this deal. It doesn't have the $500 billion figure in it, nor does it have US security guarantees. So what is this deal?
It is very vague in terms of what we know now. Hopefully we'll get some more details. We'll hopefully get to see a copy of this deal. But yeah, we don't know very much about it other than it seems to be a framework for creating a fund that would share revenue from natural resource extraction in Ukraine. Now, we don't know how much this fund would be topped up to. We don't really know how it would run other than that it would be supposedly jointly managed between the U.S. and Ukraine. And we don't know what it would spend its money on. But what I think you made the main point there, which was that the U.S. was originally looking for a $500 billion fund to basically repay the United States for its support in the conflict so far. That's not part of this fund. President Zelensky is expected to be in Washington on Friday to sign this agreement, which so far is just more vaguely worded than anything else right now.
Okay, so that's one point. The gold card visa scheme, this idea of people being able to pay $5 million for residency and a pathway to citizenship, does it mean that anyone with money can now become a US citizen?
Well, President Trump said he's ready to unroll this in 2 weeks, this $5 million visa. It's not clear whether that will be a payment to the U.S. government or more like some other traditional golden visas where you're promising to invest, you're investing a certain amount and creating a certain number of jobs. The U.S. has this EB-5 visa. It's basically about $1 million of investment promises and 10 jobs. But that's an investment in jobs as opposed to a payment to the government. We're still waiting the details on that. President Trump in his first term made a lot of promises for things that would come within 2 weeks that never happened. We'll have to see if this ends up being one of those.
Yeah, OK, that's interesting. And on the tariff front, Trump signing another executive order for the Commerce Department to look at possible copper tariffs. What do we know there?
Yeah, the Commerce Department will have up to 270 days to determine if there is some sort of a national security risk to the U.S. from its dependence on copper imports. The U.S. is not a huge copper importer, and when it does import, it's primarily from countries like Chile and Canada as well. But it does show the president's proclivity to use tariffs. And it doesn't require any congressional approval. So if he decides to go this way, on top of the 25% steel and aluminum tariffs that are expected soon, we would then have additional tariffs on copper. And you saw the markets reacting a little bit to that today.
Yeah, OK, indeed. Bill, thank you so much for being with me this morning. Bloomberg's senior editor, Bill Ferries, taking us through all of the various announcements from the Trump White House. Thank you so much for your time. Now, let's focus on a story here in the UK. Foxtons is a name well known in the property industry, and it is often seen as an entry point for aspiring real estate agents, property agents in Britain. But junior employees have told Bloomberg of unwanted touching, drunk driving and senior staff who either ignored the inappropriate behaviour or were complicit. Foxton says that it's concerned about the reports, but that it doesn't recognise the allegations that issues are not taken seriously. Joining us now for more is Bloomberg's Damien Shepherd, who spoke to more than 20 former and current Foxtons employees to report on this story. Damien, good morning to you. Just give us more of the detail then about what staff said about the culture at Foxtons.
Yeah, so this is the result of a 6-month-long nearly investigation into this, as you say, meeting with over 20 former and current employees at Foxtons. Now, my sources tell me of incidents within the company, in the office, out the office, of groping, racism, bullying, anti-Semitism, rife drink driving. These issues have spanned the past 5 years. That's the range in which my sources have worked at Foxtons. Christmas parties, boozy Friday meetings seem to generally be the places where this kind of behaviour starts, according to my sources. So some really concerning allegations, and 6 months of work has gone into revealing some pretty grim stuff.
Okay, what did some of the people who spoke out against this behaviour say sort of happened to them?
So a real light bulb moment in this investigation was when my sources described the way that leads are distributed to negotiators. So a lead is essentially the flow of work to negotiators at Foxtons, which is essentially clients who want to buy, sell, rent or let a property. Now, staff that stood up against this workplace culture or stood up for themselves against these incidents and allegations of sexual harassment said that their flow of work essentially dropped off, or in some cases reduced dramatically to the point where they were receiving no work. From that point, some of my sources tell me that they were put on performance targets which were impossible to achieve, and eventually dismissed on poor performance. Now, the overarching theme here, from what my sources tell me, is that this was a way for managers to keep this culture, and anyone that stood up against it would essentially see their work cut off or reduced, and they would eventually be in a tricky situation with work.
Okay, so those are the allegations. What has been Foxton's response?
So Foxton said it was concerned about Bloomberg's report and all of the allegations that we put into our story. They do say that they have the correct policies in place to deal with this, and they urged people to come forward to their independent whistleblowing service if they have, been involved in some of these allegations within the story. So, really interesting time for Foxtons now. There was a slight dip in their share price yesterday after the story went live, so it'll be interesting to see how everything pans out at the company.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.